Inflation report puts stagflation risks at ease. The headline Consumer Price Index, also known as the CPI, for February came in at 2.8%, which was below the estimate of 2.9% and also less than January's reading of 3%. Core CPI, which I think is even more important considering that's what the Fed looks at, and it excludes food and energy, came in at 3.1%, which was also below the estimate of 3.2%. This reading was less than January's reading of 3.3%, and it marked the lowest increase since April of 2021, when we saw inflation rise 3%. That was really the beginning of the inflation problems, as the March 2021 core CPI rate was 1.6%. I've said it before, but with inflation at these levels, I really don't see it as a problem. There are some areas like eggs that increased 59% compared to last year, but outside of that, most categories are quite tame. Shelter also continues to lift the inflation numbers as the index rose 4.2% in the month of February. This was the smallest increase for the shelter index since December 2021, but it still remains above both the headline and core numbers, which means it is putting upwards pressure on those reports. This report would have shown limited impact from the recent tariffs, so it will be interesting to see in the coming months what the numbers look like as the tariffs work their way through the supply chains. I still believe inflation will not be a problem in 2025 and that the Fed will be able to cut rates a few times this year. I'm Chase Wilsey with Wilsey Asset Management. If you like these videos, be sure to give it a like or comment, and feel free to check out our other YouTube videos and weekly newsletter for the latest economic news, expert analysis, and market insights.